Hi everyone, this is Kishore Mohan and welcome to my YouTube channel. So today we'll see how to find companies with economic moat as a part of fundamental analysis. So let's go to topic. Okay, so basically what is economic moat? Or firstly, what is moat? So what is a moat? See, a moat is basically a thing, but if you have seen castles or palaces, you might see they would dig the water body around the castle, right? For protection from the enemies. Usually there will be a castle, around that there will be a water body surrounding the castle, and so that the enemies can't come. So they might have put some I don't know, like crocodiles or something in the water body, so that nobody can come inside, and they come out of the castle through the bridge. You see that there will be a bridge, they will be laid down, and people will go out of that castle and come inside. So that water body is called as moat. So why do we do that? It's a protection or advantages for us from the enemies. Here in this case, competitors. So economic moat is basically a competitive advantage that allows a company to generate profits even in the high competitive situations. So basically, investors or fundamental analysts look for an economic moat in a company, so which gives them a nice profit for a long time, and which also keeps them money in a safe position because they know competitors can't come into this particular area of expertise or something and take over the market. Today, I'll be talking about four major economic modes of a company. The first one will be moat by government regulation on taxation. Second, first mover advantage and the network effect. Third one, the low cost moat. Fourth, building a moat by opening a new product category. Let me give you an example for government taxation regulation. So, if you see the Visa company, Visa is a financial based service based company. Basically, it's a credit card company. We all heard of Visa card, credit cards, or debit cards, whatever it is. So, Visa is regulated by the Federal Reserve in USA. We all know the Federal Reserve regulates the rates, interest rates, and regulates the amount of money the bank can lend. So this creates a barrier in this particular segment. So not everyone can come into the segment like a startup coming and will say, "Hey, we become a credit card company." We can't do that. So person with a lot of institution with a lot of capital can get into this industry. So this gives again creates a moat or advantage for this particular company, Visa. So also, Visa also benefits from government taxation. The company pays taxes on its profits, but also receives tax break on research and development. So these tax breaks allow Visa to operate at a lower cost and invest in new technologies. So that's one example for moot by government regulation and taxation. If you see the second one now, first mover advantage and network effect. See, we all know if you start something as a unique thing or first thing in the market, that catches attention by a lot of people. So if you see, when I say first mover advantage, let's consider Facebook. We all had when the starting of the internet days or even the later days, people started using a lot of mails. And in India, if you see, email was the main thing in the online, and maybe few people would have used Orkut and such. But in a social media platform, Facebook is having a first mover advantage. They penetrated India very quickly with a lot of people involved and using the services. Not just India, all over the world. They created the first mover advantage. Then they start acquiring WhatsApp, Instagram. Now, the whole idea of social media is just Meta, or the previously called as Facebook. So the Meta created is literally the universe, not for social media purpose. So that's your first mover advantage. And also this is the network effect. The amount of people using Meta services, which are WhatsApp, Facebook, Instagram, it's huge. They don't have to go and promote their company, they don't have to promote their product. So this gives a network effect. Lots and lots of people are using this. So investing in such companies is a good thing for long term. Obviously you have to buy in for right price, but still it gives a safe zone for investors. So this is the one moot by first mover advantage and the network effect. The third one, low cost moat. Example for this is Tata Steel. Tata Steel, a 100-year-old company which has captive iron ore and coal mines. So during raw material crisis or increase in raw material prices, having this kind of advantage that they can get the raw materials at low price. So this is a low cost moat. So this enables the company to protect its margin at the time of rising input prices and also stagnant prices of the finished product. So this is a low cost moat. The fourth one, moat by opening a new product category. We always know opening a new product category gives an advantage over the competitors because it's a new thing and competitors can't enter it very easily. So that's an advantage for you and creating economic moat. In recent times, one of the biggest example I can give is the Tata Motors entering the EV category. While other companies like Tesla, MG, Hyundai Ioniq, lot of companies are launching their EV vehicles, but the price is too much. A common person can't buy that car in a good, affordable price. So, entering this category, launching a product Tiago.ev at a very low price, like around 8 to 9 lakhs. The car looks so good. I have driven the Tata Tiago myself. It's very good. The looks are good. So, giving all these components and opening a new product category gives a huge advantage, thus creating an economic moat for the company. So this is how creating a moat gives an advantage over competitors or other companies in the market. So now we discussed about this moat or the four kinds of the moat. So this moat is very important for us in terms of analyzing a company for future and investing them for a long time. So if you see if you're investing in a company with a good moat or economic moat, you have advantage over other companies. So the share price might will increase for a longer time. The sales will go for a longer time. There will be profits. There will be good profit every year because they are advantage. So please find companies with economic moats. The other examples for economic, I'll just tell the names: Google, Microsoft, Amazon. If you see, all these have advantage. The first mover advantage or having a different product category. These are all economic moats. So find these companies economic moat and also make sure it has low debt or debt free. Then it's a good investment choice. So that's it for today. Thank you guys. Thank you everyone. Have a wonderful life. Have wonderful health and wealth. Thank you. Bye bye.